You are watching Market Watch, the brief overview of the key events from the world of finance. On Friday, a report on changes in the basic index of personal consumption expenditures was published. The actual data coincides with the forecast of relevant experts, thereby indicating only a slight slowdown in inflation in February. Perhaps this is the best scenario for the bulls, because it suits those who expect a reduction in the Fed's key interest rate and those who expect economic growth. After all, a slight slowdown in inflation indicates a still strong economy, but the fact that core inflation is slowing does not negate the likelihood of a reduction in the key interest rate by the Federal Reserve. Since there was no significant collapse in prices, we can talk about the stability of the world's largest economy. This is a bullish signal for the stock market and even for the US dollar. But investors need to receive additional confirmation in the form of a report on the labor market. We are talking about data on changes in the number of people employed and the unemployment rate for March. The absence of a significant decrease in the number of jobs created in the non-agricultural sector of the U.S. economy, as well as an increase in unemployment, will further strengthen key stock indices. And now let's move on to gold. Previously, we have repeatedly drawn your attention to the growth of this asset. Today, it is impossible to ignore the next update of the historical maximum, which may be due to two key factors. First, investors expect a reduction in the key interest rate by the Federal Reserve, which will lead to a decrease in the yield of government bonds, making debt securities less attractive. Secondly, the demand for protective assets is growing as the bubble in the U.S. stock market increases. Recall that in just the first quarter of this year, the S&P 500 stock index grew by more than 10%, and over the past 5 months, by 15%. The euphoria from the stock market has spread to cryptocurrencies. Thanks to the approval of the Bitcoin ETF, there has been a significant influx of capital into this market. But it is also important to take into account the general optimism in the stock market, which made possible the staggering growth of Bitcoin and other coins. The bullish scenario will remain a priority, provided there are no significant sell-offs in the stock market. It is also important to monitor the general news background, because the appearance of another wave of restrictions in the United States can significantly slow down growth, which practically guarantees a collapse in the short term. Nevertheless, at the moment everything points to the willingness of buyers to continue the rotation, once again updating the historical maximum. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.